people love their pets. They love to spend a ton of money on their pets. And when their pets get sick, it's like it's part of the family. And so, of course, they're willing to spend just about whatever it takes to get them well. That is why Zoetis, which is a spinoff from Pfizer, may do well in the IPO market. Francis, I mean, this pet spending market is huge. We've seen this on the pet retail side, and here we have a pet medical company. And again, you know, people are willing to just spend whatever it takes to make their animals healthy, and that's going to bode positively for Zoetis.
Well, yes, perhaps. The market is worldwide is growing 6% a year, which is okay. It's not great. This company dominates that market, and so it'll grow with the market. There's a lot of financial engineering going on with Pfizer. What they did, the $2 billion is going to go to pay back debt that Pfizer owns. Then what Pfizer did is they slapped $3.6 billion of debt on this company, and all those proceeds are going back to Pfizer. So, and the Pfizer, if it's priced at the midpoint range, is going to be worth their share about $10 billion. So they're taking about $15 billion out, or they could. Now, when you look at the earnings, they earned $404 million on a pro forma basis for the 9 months ending September. Their revenue was up 2%. And I know it's a big institutional favorite, and it's the only way to participate in this business worldwide. So it'll do well in the stock market. But I've never seen a company manage its income statement so blatantly before the IPO. And by that, what I mean is that the revenue was up 2% for the 9 months in September 12 versus 2011. And if you look at the expenses, they jammed their expenses down 9%. So their pre-tax margin went up from 12% to 20%, and that was more than covered by jamming down the expenses. Also, they cut their tax rate by 5% to 30% from 30% from 35%. I know that's a lot of numbers. What it boils down to is they jammed their expenses down 14%, and that's, if they hadn't done that, they would have shown a loss for the 9 months in September versus 2011 9 months. So I think it's fully valued on a valuation on a numerical basis. I think a lot of what I just said is going to be lost on the institutional shareholders. I think they're going to go ahead and buy it blindly. I think it's going to go up, but I just don't see the long-term rate of growth there. Is coming at 22 times earnings. It's got a negative price to book value because Pfizer sucked all the energy out of it on a balance sheet basis. So I'd recommend buying it on the IPO and not expecting a big growth rate. But these institutions are piling into companies that are instant blue chip favorites.
Right. I would have to agree with you. When I looked at the numbers that you ran, it did kind of make me a little queasy. I thought, you know, this doesn't look really good on black and white, you know, when you start to crunch the numbers. But I have to say there's a lot of buzz around this name. There's a lot of excitement around this name. And so I think that just off of that, the emotional psychology of the stock is going to push it up, and people are going to not really look at the numbers, which would make you think twice about getting into Zoetis.